Hello. Welcome once again to our weekly podcast. My name is Seewing Yee from the Yee Real Estate Network. And my special esteemed guest speaker is Mr. Richard Advani from Supreme Lending, who is a leading investment loan agent who does financing for real estate investors in all 50 states. He also does refinancing. He also does primary home buyers, owner-occupied buyers, to get a loan, and in all 50 states also. So welcome, Richard Advani. Thank you so much. I know you're a very, very busy man helping a lot of people doing investment loans. So without further ado, and let me go ahead and share my screen. And again, I'm going to surprise you because you always have the ability to adapt and to go with the flow and quickly able to think on your feet to go over a certain analysis that I have for you. And today is no exception. And thank you for your assistance. So what I have in front of you, I know it's kind of hard to see from a high level. As a matter of fact, I need to put on my reading glass. Now, Richard, because Richard have done investment loans for risk investors for many, many years in all over the country. So he understands how to help risk investors. And today is what I have in front of me is a inventory spreadsheet on a Buffalo Niagara Falls. and I'm going to ask Richard to, because you're very objective, you have no skin in a game, if you will, whereas I do. So yeah, just go through the process, do a case study, walk it through. You put yourself in the shoes of risk investors, in which you are. In fact, you have some properties in your portfolio in Buffalo Niagara Falls, so that's good. Now, before I go over the number, and again, this presentation only should not be more than 15 minutes. Okay, I need to watch for times. Now, this is a weekly or a monthly inventory listing. It's off market. Is not available for people out there. It's only available for risk investors. Now, this turnkey provider, Buffalo Turnkey, have been doing this for over 30 years, and they have a relationship with many investors over the years. And a lot of their buyers come from across the border, Niagara Falls, only 50 miles away or less. They come across the border and they buy these kind of properties, mostly in cash, because they understand the yield, they understand the rate of return on this type of houses, rental houses, and also they have done business with people overseas, people from Israel, from Lebanon, from Australia, from UK, and a few other places, and some people from South America have purchased in their inventory over the years, and also. This Buffalo Turnkey also does this with out-of-state real estate investors from throughout the country, and our network are included as well. And again, so they have a track record, so they just, everything they do is referrals and what have you. And the reason why most people buy all cash or with their self-directed IRA. We are very blessed to be giving the permission for our investors, if they want to, they can get financing. They can purchase any of these properties with financing, whether it's $40,000 or $60,000 or $100,000. We have a Wells Fargo team currently, which Richard Advani referred to us, can do this low financing loans on these kind of great properties. Of course, Richard Advani can only, and his company can only do loan amount that are higher than $80,000. If I'm correct me if I'm wrong, Richard. So I'm going to ask Richard to, from a high level, just to go over, if he were an investor, why would he think this might be an opportunity for him to buy, for example, right? So Richard, I'm going to ask you to put yourself in the shoes of an investor and see what you think. But before I'll ask you for your input, let me give you some what this inventory spreadsheet is all about. And hopefully you can see this category is in Buffalo, New York, and below is Niagara Falls, which is on the other side of town. But needless to say, so this is a daily, weekly, or monthly inventory. A lot of these inventories get sold very, very quickly for obvious reasons because the return is so high. This is it's a cash flow market. These homes are very, very old, but they've been rehabbed properly by this turnkey company in Buffalo. So let me share with you. And if you look at the category of ready, the category here under status, if they're ready, that means they're ready to be sold to investors, all right? And if they are categorized as future means these properties are being rehabbed as we speak. They may take another week, another month, another 2 months to be rehabbed properly, to make it turnkey, so they can put these properties, they can convert it to ready status for investors like us. And of course, the other categories are under contract. That's obvious. Somebody bought it, they're under contract, they're going through the escrow. And I think there's nothing more I can say. And then these numbers, some of you may not understand fully, but these numbers are, to me, it's kind of clear cut. I mean, they did not go over the, if you do a loan, what will be the rate of return? It doesn't have that numerical formulas, but these numbers are based on if you would buy all in cash. But if you can do a 20 to 25% down payment, obviously your cash on cash return is higher and your total ROI is higher, and then what have you, right? So let's just focus on, Richard, let me go through some properties and quickly from a high level, share with me what you're thinking. So let's go with the ready properties. Let's look at this. This property at line number 16. This triplex is ready to go. Is priced at $149,000. It rents for $1,700, so $500 per door. And then you have the taxes, you have the insurance, you have the water. You have to pay the water as a owner, as a landlord, anything that or duplex or higher, and then give you a double-digit return if you buy all cash of almost 11%. So if you in financing, which you could get at 25% down payment, so obviously your cash flow could be very, very high. So if you look at the rent to value ratio, I educate my investors about if you have a 1% rent to value ratio, that means you have a very, very good cash flow. So quickly, what are your thoughts on this, or the numbers associated with this property? They're ready to go, turnkey. Clearly, the rent to value ratio is way more than 1%. So quickly, what are your thoughts if nothing else, a quick analysis, what do you think of this triplex?
Yeah, I mean, obviously finding positive cash flow in general is tough these days. So finding a property that has an 11% return with the cash purchase is pretty phenomenal. Obviously, if you leverage that return number is only going to go higher. I have met the Kanazis, this group that you work with before myself, and know the quality of work that they do. So overall, obviously double-digit return. Once again, on that cash purchase, I'd say it's a pretty solid buy. And then on top of that, a 3-unit is also a good hedge against, the future and things changing in the economy, just because you have all 3 units rented. My hunch is that even with 2 units rented, it's still going to pull a good return. Or if you leverage, of course, having a multi-unit property, especially a 3 or 4 unit property, kind of gives you a little more exit strategy and buffer room. Once again, if you have 1 unit vacant, those 2 units will definitely still cover the payment if financed. So it's nice to know. Obviously, there's still opportunities to make double-digit returns in different markets across the country.
Yeah, very good, Richard. By the way, when I create a pro forma for our investors, I incorporate like 5 to 7% maintenance factors. We all know older properties like these, yeah, you can pay maintenance out of pocket more so than the newer properties. But you get what you pay for because you have a very low down payment on the financing. You get the bang for the buck. So investors buying this kind of property, you need to understand this is a high cash flow properties. The appreciation is okay, not great. And you can expect, it's all about expectation. You need to understand that, you're going to have some issues down the road. If you as an investor, if you understand, you have to come out of pocket for maintenance, repairs, vacancy is low these days, as you know, because of there's a lack of places to rent all over the country, skyrocketing rent, and even appreciation potential, even in this market. So, all right, so so this is a, for our investors, they're buying low cash flow properties in good markets in Texas and Florida, in North Carolina. Then you can balance your portfolio by buying higher cash flow, so you can balance your portfolio, if you will. So quickly, let's go to another property. Let's look at another one. Now, Buffalo is, in terms of a class location, the way I describe it is like a B to B minus location. So it's not so bad, and it's a very, very stable market. So quickly, let's go over this property in Buffalo also. This is they do have single family homes. This one is really nice, Richard. So this single family home is located in Lockport, Texas. Buffalo is selling at $102,000, and it rents for $1,450. So this is a single family home, all ready to go, rent ready. The tenant is probably living there already. So again, where else in the country can you find a single family home for $102,000, all rehab, turnkey, ready to go, rent for $1,450? So that's way up, 1% above rent to value ratio. So it gives you, if you buy in cash, it gives you a 13, almost 14% yield. But if you do financing with 20% down payment, I could make the argument that your monthly cash flow after all the deductions is probably like $400. So quickly, what are your thoughts on this particular property?
It must be obviously a nice property, renting at $1,450, $100,000 purchase price. So once again, still, high cash flow property. I do like the multi-unit avenue just because it does give you exit strategy, of course, with those other units as we discussed. However, typically with multi-units, you're not going to quite get the appreciation of single family homes. The American dream is a 3-bedroom, 2-bath, single family home. So this does fit in that model, and hopefully will attract a long-term tenant, a family, since it's obviously a house in a good area. But once again, the returns are pretty crazy considering this day and age.
Yep, absolutely. So we're done with Buffalo. So let's spend the remaining 7 minutes or so. Let's go through 2 sample properties in the Niagara Falls. Now, Niagara Falls, the price is a little bit cheaper, and the location is not as good. I would say C to C plus location, if you will. But still, I mean, it's a very stable market. The rental is always going to be good. Many of these renters, let's face it, they're going to be renters forever. So, they're blue collar, they work for the local grocery stores or Walmart or whatever, or maybe they're government workers making $30,000 to $40,000, and they would love to rent your house. There's a shortage of rent in this market, just like anywhere in the country. And even Buffalo is exploding in prices, just like most of the country, especially during the pandemic. So with that in mind, let's go over a ready property we can look into. This is let's go over a duplex, okay? DBL means a duplex. Let's look at one ready property. Okay, look at this one. This duplex, all we have is probably rented at $98,500, and it rents for $1,280 on both doors. So approximately $600 and something per door per side. So it would give you a return of almost 12% on a all cash purchase. If you do a 25% down payment, I'm venturing to guess that your monthly net cash flow, even at 5.3% interest rate, so is probably around $400 to $450 monthly net cash flow on this fourplex. So quickly, what are your thoughts if you were an investor? What is the pros and cons of this nice looking duplex?
Yeah, obviously, as you guys can see, all the cash flows of Niagara are on average higher than Buffalo, looks like by about 40%, 30%. As Seewing mentioned, they are probably C plus neighborhoods. Now, that doesn't mean there aren't good investments. We both have lots of clients that have whole portfolios built on these types of properties, and they make a lot of money. I think what's important, though, is to know what you are buying, right? A lot of people may buy a property in Niagara expecting the appreciation and the tenant turnover of Buffalo. There's a reason why these have a higher return. So be aware of what that reason is. That way you don't have any surprises. Of course, they may require a little more long-term effort. Now, most of them with the Kanazis are renovated, so you don't need to worry about that, but they are older properties still. Things can go wrong. They're not in as nice of areas as the Buffalo properties, which is why you make that higher return. So still a great asset class. Knowing how to manage them is important, and knowing, once again, what you're buying is important. But I mean, look at the returns, right? There is a business model to be made out of these types of properties.
Yeah, and of course, Richard, you have done a lot of these loans for our investors, right? Buying this property, so you have a unique understanding of this market. Your appraiser that you use when a loan transaction appraise consistently with the selling price. So these are all legitimate numbers, legitimate selling prices. Is this company, Buffalo Turnkey Provider, is a very transparent. They do well for the investor, and that's why they've been around for 30 years for a reason. And okay, finally, Richard, one more property I want you to review, then we're done. So this is a single family home in Niagara Falls, and this is mind-boggling, right? And this property is ready to go. The tenant is probably living there, all rehab, at $52,500. The tenant is already paying $600. Yeah, most people buy with all cash, but however, if you want to leverage your investments, if you want to create a leverage portfolio, you can do investment loan financing on our in-house lender at Wells Fargo, Mr. Ian, what's his name, Dornfeld. He can do it, and Richard can only do loans higher than 80,000, as I mentioned before. So again, this property, rents at higher than 1% rent to value ratio, which is good. It has a return of 9.25%. So this property can be financed. I say it again, you can finance this single family home in Niagara Falls for $52,500 at 20% down payment. For example, if that's the case, my estimated positive cash flow on this property is probably around $150, maybe $200. So with that said, so Richard, if you were an investor, and even though you wouldn't buy with cash with the IRA or with all cash purchase, nothing wrong with that, but you can do a financing, like I just mentioned, what is the value add associated with financing this property? If you finance the property, you're only paying like 13 grand total out of pocket on your down payment, plus a few $1,000s closing costs. So that's what making you money work hard for those investors that want to do financing. So what are your thoughts on this final property for your review?
It's a great property for new investors, but also seasoned investors too. A lot of times, especially with 1031 exchanges and where property values fall, we find our investors with $50,000, $60,000, $70,000 in extra funds that are not deployed. So it's a great opportunity to diversify. Obviously, the rents pulled in are pretty high as well. But once again, know what you're buying. I think that's very important in a higher cash flow market like this. But numbers definitely look great.
Yeah. So with that in mind, so yeah, I think my takeaway from this analysis is that Yeah, I mean, this kind of properties may not be a right fit for some investors, but again, if you coming in knowing your expectations, knowing that some little bit extra work involved with respect to the maintenance and issues, and you know, if you understand that, but nevertheless, and you have professional property management, everything is turnkey, everything is done for you, very passive. You're 2,000 miles away. Many of our investors have purchased 2 or 3, 4 properties per investor. I mean, it's that simple. So, all right. So, yep, that is my conclusion with respect to this type of purchase methodology. And thank you for attending. Have a nice day.